Hey, everybody. Welcome back to Resin Market Moves. I'm Michael Workman. It's the week of March 28th. And this is the week I need you to pay attention because the market is telling you something pretty specific right now, and most buyers are going to miss it. Here's what's happening at the macro level. Producers across almost every major resin family are no longer just recovering costs. They are layering increases March, April, now May, and they are doing it with real confidence. The Strait of Hormuz situation is providing that support, and with talk over the weekend around a land war coming, it certainly doesn't look like it's going to be a temporary situation. But make no mistake, producers have been waiting over 2 years to recover compressed margins, and they are moving aggressively. The question for every buyer right now is, are you walking into Q2 negotiations with a real number, or are you walking in with theirs? Let's start with polyethylene. We saw one major polyethylene producer revise its April increase to 30 cents a pound. Another is at 20 cents for April on top of what's already present for March. And there's been a third polyethylene supplier that's already signaled for May. The ethylene feedstock did touch 30 cents a pound this week, so there certainly is some pressure there. Export demand is keeping the spot market elevated. North American inventories are healthy for now, but that's really the only buffer. It's not going to last. Lock in your volume needed for the second quarter and into the second half of the year before more nominations land. In polypropylene, the March polymer grade propylene, or PGP, price settled at 46.5 cents, which was up 3.5 on the week. The year-to-date polypropylene contract increase is now 15 cents a pound. Invista's PDH unit is still down with a 90-day outage, and April nominations are building. The contract reset window is certainly closing, and if you haven't acted on current levels, this is the week to do so. In the styrenics, it's starting to become an urgent situation. I want to spend a little bit of time here. ABS and polystyrene, both critical. Benzene is the key feedstock for both those resins and is above $4 a gallon. It moved 27 cents a pound higher on the March benzene contract, with styrene also firming, butadiene jumping up 11 cents to 60 cents a pound. There's been a lot of supplier activity, 20 cents per pound on the table for ABS from one supplier in April, another at 15 cents a pound, and the largest polystyrene supplier here in North America is out for 17 cents a pound. The math isn't complicated. The feedstock support is certainly real. The only thing slowing down the implementation is the demand picture, which continues to remain soft. And that's a limited cushion as we move into the summer months. If you don't have a qualified alternate for either of these resins, you need to be on notice and you need to be acting quickly. In polycarbonate, I want to talk about a quick note on two markets moving in different directions. There is opportunity in polycarbonate with feedstocks relatively flat given everything going on. China oversupply is capping the ceiling of this price movement in the market. There have been Asian suppliers that have frozen orders in Korea and Taiwan. But demand remains soft. Producers are pushing 10 to 16 cents a pound of increases for the month of April, but implementation is going to be certainly more challenged than in the other resins. Put out competitive bids if you have the opportunity to do so this week before tariff noise returns and the window closes here. In PET, it's the calmest market we're watching currently with no proposed increases on the table. Paraxylene and PTA are moving slightly, but nothing material. Bottle demand is currently in a lull, but will ramp up here as the summer months approach. In nylons, both 6 and 6.6 are under upward pressure. Celanese, which is a large supplier in that space, has announced an increase 14 cents a pound for April in the Americas. And there's also a force majeure declared in Asia from one of the large nylon 6.6 suppliers, which is a supply signal that we need to pay attention to. Caprolactam for nylon 6 is flat, but is starting to appear to get elevated again. Certainly lock in 90 days worth if you haven't already done so. And in PVC, turnaround season is here. There are certainly some pressures there being applied by those assets being down, but with housing and construction demand still relatively soft, new home sales just hit a 3.5-year low. The supply tightening is real, but demand can't carry the increases on their own. So stay in the spot market and don't overbuy. So here's the summary. Most markets are moving up. A few are moving up fast. And one in particular is giving buyers a window right now that will not stay open. That's polycarbonate. The buyers who know their feedstocks, know their leverage, and know which markets to act in before April nominations land, those are the buyers that are going to look very smart here as we move through Q2 and into Q3. If you want to know where your specific materials stand against the market right now, reach out to us. That's exactly what we do. I'm Michael Workman. This is Resin Market Moves. See you next week.